trying to talk about the possible reasons why there's a very sharp gash today. Not that now we are attuned to sharp gashes in the market, because 8% in the from the recent peak in September 26th, if I'm not wrong.
27. Yes.
26, 27, right? But yeah, I mean, the one feeler that I got, Samina, when I spoke to a couple of dealing rooms, is that there are possible margin calls now coming into play. A lot of people would have rolled over their positions believing that this is yet another dip which will get bought into. Now they've waited for a while. The whole October series, nothing happened. Rollovers happened. Now I think after this fall, margin calls are coming into play.
Or you know what could have happened, Neeraj? Because while the Nifty is down 8% from its recent peak, the broader markets have had it rough. I mean, broader mid-cap index is in a correction mode. The one advice that I consistently heard all through October, which could mean that despite the correction, margin calls weren't too active, largely because it could have been pushed out to November now, is because most traders were going in with only intraday positions. So there were very few carried forward positions, which also meant that margin calls should have come in the early part of October. That hasn't happened, but because the selling is intensified to the extent it has, the pain and the trauma is so much more today. And also this is surprising because we've had a very tough October. I remember guests like Manav Chopra of Nuvama who indicated that another 15% from here on for the broader markets cannot be ruled out. Diwali week would see some stability because volumes will be light, but as soon as Diwali wraps, November will start with a downtick. And that's what's happening. Stocks are getting beaten down, earnings withstanding, recent corrections withstanding, nothing seems to hold.
Yeah, it's not, and maybe the earnings season is not doing us any favors, but I don't know. I mean, maybe earnings is the possible catalyst, if you will, or an afterthought, yes.
Yeah.
But maybe the reason is not just earnings, but also the fact that could it be that people are now starting to think that with the markets having corrected the way they have so badly, let's play it safe ahead of a very big week, because we do not know what the outcome of the US election might be and what impact it has on US markets. Because if the mother market were to correct, then it will have a ripple effect on our markets.
But this is where I am concerned, Neeraj, because the mother market has done very well in October.
Exactly.
The Nasdaq is still up 4%.
But if it corrects,
then we will fall down. So I guess the decoupling is happening on the way up, and no decoupling is happening on the way down. So earnings disappointment. China has woken up from a snooze, which is turning out to be quite a problem. We didn't anticipate this, let's be honest, because in fact when we talked about flows as well, the idea that we picked up on was European money was going into China. It wasn't coming at the cost of India, at least in the first 10 days of October. That sentiment has changed. DIs have matched dollar for dollar in October. Now the point is, there's only that much money on the sidelines, right? You are allocating incremental capital at every downtick. But the minute the commentary is 10% lower from here, you start believing there are better opportunities around the corner, which concerns me a little bit.
Yeah, so, and Samina, hence I want, to my mind, the SIP numbers that come out in November, in the first week, arguably the most important SIP numbers of the year, because this is the first real test for the Indian retail investor. Thus far, not impacted by a large correction, every dip getting bought into. This is different. This is a telltale sign of how different and how steep a market correction can be. Will the Indian retail investor hold her or his ground and keep that money parked into mutual funds month after month,
so
in the month of October?
A lot of advisors are telling investors to do is consider rebalancing at this stage, right? Because you want to take your profits out of funds or fund managers that you are not constructive on for the long term. Because everything has gone up, right? The fact is you made money even if you didn't have quality to offer in that sense. So rebalance that piece, take your profits off, continue running your capital. If that money is coming out, my only positive bias is that there is no alternative asset class to invest in. There is no alternative market to invest in.
No, long term,
Indian
of course,
investors have a domestic bias. We have a home bias. So all that money does have to find its way in. Whether it comes in today or at 22,500, those are the kind of numbers, by the way, that are doing the rounds. Is anybody's guess. And I think new investors that we've talked about, right? In 9 years, we've not had one single calendar year with negative returns. COVID investors have never seen red on their portfolio. This, of course, is a reality check, which is much needed.
Yes, it is welcome. But I still think that this is now at the I mean,
eternal goal.
No, who knows? Who can predict the market?
No, of
Nobody
course
can,
not.
right? So I don't
Yeah,
want to.
and all of this is afterthought, right?
Exactly.
This is
And we
why
don't
it
want to get
happened.
into predicting what the Nifty will do tomorrow.
Yeah.
But at some point of time, you see this line, it is starting to look a bit stretched on the downside. It's been 9.5%, 10% of a corrective move from 26,200 all the way to sub 24. At some point of time, this has to
And
relent.
beyond 10%, if an index or a stock falls, it's usually called a correction phase. So you want to keep that in mind. I know we've talked about this also extensively, where we'd ask our guests, right? Do you think there'll be a price correction or do you think there'll be a time correction? I now almost feel like we might have had a price correction, but there'll be a grinding, slow
Very
move
likely.
between now and December. And don't forget, December is when flows generally from outside slow down. The reason being because a lot of the funds outside this country do a book closure, and the last week of December is a holiday post Boxing Day in Europe and the US. So anyway, we're going into that phase where this holiday season, you want to take money off markets that have done well for you and sort of reallocate bets. But I think we just have to hold our breath, keep it together, meditate, and I guess run light positions. I think the clear advice coming on is don't over leverage. Leverage doesn't work in markets like these. If you've been trading 10 stocks on the F&O side, bring it down to 2. Maybe it might be even wise to not carry forward positions. So run with intraday positions. If it's a loss, take it. If it's a profit, take it. Because predicting this market is not easy anymore.
Yeah, most certainly. Most people are getting it wrong. So yeah, you might too. But yep, thanks so much for tuning in. I hope this helps. And of course, stay tuned to us because we're getting a bevy of voices through the day to try and help you navigate through this slightly different period.